Uh, our forecast today tells us that 2009 is going to be a pretty bleak year and that 2010 isn't going to be all that much better. But if you unpick it, what you see is that the first quarter of this year will, we hope, be the worst by a margin, that the economy will start to stabilize over the rest of this year, probably flatline in the second half of this year, gradual pickup into 2010, and by the final quarter of 2010, with a bit of luck, it'll be back to something like a respectable growth rate. It looks as though the recession will, give or take, last for about 5 consecutive quarters. And peak to trough, it'll be a fall in output of nearly 5%. So that is worse than in the early 90s, but not as bad as it was in the early 1980s, we hope. But of course, there's a lot of uncertainty about it. I think that in terms of output, with any luck, we're past the worst. The first quarter was really bleak. Actually, we think it may turn out to have been actually worse than the official statistics are now suggesting. We think in the first quarter we might have seen a decline of over 2%. I hope very much that we're not going to see anything like that again in the near future. But of course, unemployment is a lagging indicator. Unemployment continues to rise after the economy has stabilized. So we think that unemployment will continue to rise quite sharply through the course of this year. We hope that the total figure will not be quite as starkly bad as we felt when we did our last forecast 3 months ago. But it's still, we think, going to be give or take 3 million, which is obviously a great concern, especially within that a steep rise in youth unemployment, which is very worrying for us all. The UK actually is not coming out of this as badly as some other countries, which is sort of ironic because in the early days everybody pointed at the UK and said financial services, oh dear, oh dear. But actually the countries that are right now coming out of the worst, perhaps of all, are those with big exposure to international trade, like Japan or Germany. I think that, give or take, the UK will come through this sort of broadly in line with the EU average, and it might come out of it sooner than other members of the European Union, in the sense we went in relatively early. We got quite flexible labour markets and we got a flexible currency. That gives us the chance to rebound from this a bit quicker than the others. The mood among British business is lighter than it was 3 months ago. 3 or 4 months ago, it really felt as though the wheels were falling off. You know, the banks had been wobbling over the edge of the precipice. There was a worldwide demand shock of a kind that nobody had ever experienced in their lifetimes. You know, demand had fallen 20 or sort of 30% in the space of a couple of months, and people were really anxious about what was going to happen next. Now, that mood has stabilized somewhat. I think I like the line that Stuart Rose at Marks and Spencer put recently. Maybe we're just all fed up with being fed up. And there are some signs that consumer confidence is a bit better than it was. Business surveys, the forward-looking business surveys, are brighter than they were. There's still a lot of anxiety, a lot of uncertainty, but there's a greater feeling of stability than there was. Well, inflation is likely to fall over the rest of the year. Now, probably not as much as we all hoped it was going to do because of what's happening to the oil price and other commodity prices. But the oil price has sort of doubled since Christmas Eve, roughly, and that will have an upward push. But there's still a really big gap between the actual output of our economy and the potential output. So there's a huge amount of slack there that can be taken up before bottlenecks start to appear. So we think that inflation is likely to remain subdued for a couple of years. We think that interest rates are right now at 0.5 percentage point, and they're sort of freakishly low. That the Bank of England will want sometime next year to start tweaking that up a bit because they will be worried about, they should be worried about inflation over the longer term. So they're going to have to start getting a grip on that, but probably not till 2010. I made a speech saying that it was time for politicians to get a grip on things. I said it because I was feeling a bit grumpy about the way in which politics seem to be totally preoccupied with what's going on in Westminster. And there are some really big issues out there that won't wait, like the state of the public finances, which are very serious, like rising unemployment, like energy security and urgency on the climate change agenda, a whole bunch of big and important financial regulation, lots of debate going on about how it will shape within manufacturing, the automotive industry, the motor manufacturers, some big decisions urgently needed one way or another there. And I felt that it was time to say, let's focus on these a bit, because that's what will shape our economy and even our society over the longer term, rather than spending all the time looking at our navels. We need the credit markets to return to full health. They're still damaged. Access to credit is not getting any worse, but it's not getting a heck of a lot better. And companies are still finding it hard to get the money they need to rebuild their working capital, let alone building new plant and equipment around the place. So the credit markets have to get better. And people have to have, I think, a greater sense of confidence than they now have that the public finances are going to be got into shape. And right now, people can see great big deficits as far ahead as the eye can see, and they're saying, what's going to happen? Are we going to cut public spending? Is public spending going to be cut all over the place? Or are taxes going to go up? Or both? So that's a kind of uncertainty that doesn't actually encourage entrepreneurs to get up in the morning. Get on with it, basically. I think that politicians need to start looking over the whatever you call it, the parapet a bit, and getting on with things. I think that businesses also need to show a lead and to be clear and confident in where they're going, if they can afford to be. Consumers, well, consumer confidence has picked up a bit. It's likely, I think, that consumers are going to want to rebuild their savings, which were run down very much over the last years, and shift from borrowing quite so much into saving a bit more. And that means that their behaviours will change. They'll be more conservative, more cautious in the years ahead, and that's probably going to be a good thing.